Well, good morning. Thank you, Lisa. My name is Gamiel Gran. I'm with Mayfield. We are a venture firm in California. And I just love to talk about innovation. It's just so thrilling to be in a room with people who are all about innovation. So I have this really fun role that I've been doing for the past 20 years inside of a venture firm where I help our portfolio companies, early stage portfolio companies, realize market adoption. And to do that, I spent a lot of time with global CIOs, as Lisa was talking about, who share their problems, who share their needs to innovate. I wonder if we all sort of thought about innovation as a sport, where would we compete at? What level? Are we Olympians? Or are we, remedial learners? Or where are we for yourself, for your team, for your whole organization? And so this is a big conversation I spent a lot of time really honing in on because this is what brings success for our portfolio companies, that early adoption. So just by way of background, Mayfield is a long-standing early-stage venture firm. We're one of the oldest in the Valley. We're based in California. We have a separate fund in India, but all of our investments that I'm talking about or I'm focused on are really US-based. We've been around 54 years. We've raised 22 funds. We've done about 800 investments. We're typically leading at the Series A or seed level, and we maintain a relationship with the companies throughout their life until they IPO or exit in some very successful way. These are some of the logos of the companies that we've been involved in throughout the many years. Most of them were seed funded or Series A funded by us, where we sat down with the entrepreneur to figure out how to realize product market fit, early adoption, really figure out the technology, the market space, et cetera. Most companies succeed when they have what I call violent product market fit. They're really focused on a primary market and are excellent at that. Most companies fail when they are spread too thin. They're working on 12 use cases in 12 different markets with too many opportunities and are improperly focused. Doesn't mean you can't ultimately take 12 hills, but take one first. So we really try to help them with that early focus. We just raised 2 new funds in this market. Raising funds has been difficult for some firms. Luckily for us, it was something that was very successful because we've been around for a number of years. We were able to raise pretty quickly. These are the segments that we are investing in, so very high level, and I won't get into them in all detail, but everything across the infrastructure space down to semiconductor infrastructure is a key piece for us. We're talking about the renaissance of silicon, bringing silicon back into the Silicon Valley. Of course, AI is all the rage, and I won't do too much on that, but there's a lot of topic there. Of course, data is driving whole new sets of opportunities. Co-piloting and different solutions is happening. Cyber, planet health is another sector that we're focusing on, and then healthcare, therapeutics driven by precision medicine and opportunities on that front. Just a minute on what's going on in the venture world. I love to read how the press can sometimes just do an enormous job of saying the venture world is dead or about dying or something. And then you look at numbers like this and go, wow, it is way off. So this chart shows in blue the amount of funding that's gone into venture deployed from venture capital over the past years, from 2015 to the last couple quarters. And obviously what happened during COVID, there was an enormous amount of influx of very high valuation opportunities. Companies were getting acquired or getting funded at valuations that we had never seen before. And I bring up this chart with my little yellow line there as a way to say, if you look at this longitudinally, we're sort of back to normal. And that means valuations for us are in a proper range. During that high flight area, we just did not invest. The kind of deals that were happening with valuations out of control, with late stage funds coming into early stage, with ownership opportunities below our normal ownership potential, we just said, hey, we can't do the deal. Love the idea, but can't do the deal. So things are back to good numbers for us. Just another optic, why does money keep going into venture capital? 2 little bubbles here. So IRR is, of course, the performance number that we all trigger ourselves against. We perform to win the new LP relationships based on this. So the first bubble on the left is the performance over the last 10 or so years. The next bubble to the right are the tier 1 category venture firms. Mayfield, luckily, has been in the tier 1 category for a long time. which leads us in an opportunity to generate these sort of returns. But if you compare it to the S&P, you can see why LPs continue to put money into this high-risk alternative asset class. Some of the things that are happening in the venture world, there are headwinds, but also tailwinds or accelerants. On the headwind side, the valuations out of control has caused a lot of looking backward for GPs or general partners in firms. They've got firms that were overvalued, that still need funding, still losing capital, and they're having to support those firms who are unable to raise subsequent rounds because they've not realized market success. Distributions are down, meaning their LPs are saying, so when am I going to get my money back from what we've given to you? All of that creates sort of a pause broadly in the venture climate overall. But the accelerants, in addition to all this Gen AI stuff that we're hearing, which is driving valuations back up again, is there's an enormous amount of dry powder still sitting on the sidelines. So as I mentioned, Mayfield really held up on funding. We see that there's a number of firms did the same. So that dry powder represents a vehicle to really deploy into these new sectors in an aggressive way. So we think it's an enormously great time to start a company. Funding opportunities really are there. There are new segments. We think companies, entrepreneurs are actually much more pragmatic in this market. So when they come to us, they have really clear, high impact value propositions. Teams are really well honed. They may not be driving the fanciest cars, they might be eating top ramen, but we kind of like that sort of pragmatism from an entrepreneur standpoint. So some of the hard truths that I've learned over the course of these 20 years in venture around driving corporate innovation, as to what I alluded to a minute ago, starting with our track record of companies, I hear from corporate teams who come to Silicon Valley, something we call sometimes Silicon Valley tourism. Hey, we want to be more like a startup. We want to move fast. We want to do things in a way that make us look like a venture firm. We want to actually be startup sort of focused. Like, that's great. But then I deal with this sort of quandary, which is you're a big steady state organization. So if you're the big corporate team on the left, you don't actually want to break things. In fact, change and change management is really problematic. Meanwhile, we're investing in these startups who are specifically here to break things or disrupt or create, in a creative sort of way, a new market, a new opportunity. And so I kind of call this the impedance mismatch. And so, as I mentioned, or as Lisa mentioned at the opening, I've gotten to know a number of corporate innovation teams, and none of this is my science. I just ask them, how do you guys do this? And how do you do it well? And if you're, back to my sports analogy, are you an Olympic level or are you a learner? And if you're an Olympic level, share with me what's actually working. And so we start with these sort of questions. Why are you doing innovation? So I see it's on your corporate website, but can you extract it down to very specific things? Do you know what individuals' roles are? And of course, I'm sort of leading here the witness on some of the questions. Why are we actually doing it? And even why go very early in the process? And so very simply, I have created something I call the 3 I's of corporate innovation. And again, this is just my extraction from having conversations with many of you, and I'll try to quickly go through these. But the first I is the ideation. Are you seeing enough volume of ideas? And Mayfield, for instance, sees about 5,000 business plans, new ideas every year. We invest in about 1 deal every month. And so the volume of ideas, pick a category, semiconductor, climate, therapeutics, we'll have seen hundreds in that category, and you could sort of plot diagrams. So just think if a corporate innovation team isn't so insular, but actually externally looking at what's going on in the market at that sort of scale, they're going to have a higher level of knowledge, right? But the first problem that I most often see in the ideation is, how is the corporate team extracting, why are we innovating for the rest of the organization? So if you were to stop somebody in the hall in a large organization, an individual, let's say in a lunchroom, and say, so corporate team has been talking about innovation, what does it mean? And you get this long sort of pause. I'm not sure what it means. I mean, I think it's important. What are the areas of focus for innovation for our company? I'm not sure. What's your role? I don't know. Those sorts of simple interpretations are the way that it turns into a true sort of collective effort. And that's your leadership driving that, interpreting it, even asking these questions. And then one other sort of idea that I've seen is integrating it into regular meetings. You ever have a regular staff meeting? Are you talking about innovation somewhere in that? Organic, inorganic innovation? Does anybody have an idea? Is there something that we need to fix that's broken? Or are we just plowing to the regular reports that we have to get out, the regular process? And it doesn't mean you have to innovate all the time, but are you allowing enough oxygen for that? So that's the ideation piece. The incubation one is the one that most often breaks down. So you come out to the Silicon Valley, you meet with a bunch of great firms, and I ask them after these great meetings that we have with them, we call these corporate innovation briefings, say, so what do you guys do next? So you met with these 3 companies and you're like, oh, that cyber company is just awesome. We need to go further with them. Like, who on the team here is actually going to lead the process? And are you great at it? Are you better than your competition at that? Meaning, will that startup want to work with you or you? Because they've got limited bandwidth too. And if your process is sort of broken, or you don't even have a shepherd or somebody to make it work well, then you're likely going to fail. So that whole process is something that I do believe, and I double click on this, be competitive to your peer group. Have the best incubation process. Know how your competition is finding ideas and extracting innovation insight in the best possible way. And then the last point on that sub-bullet area there is presume 100% failure. You're going to find a startup, and back to the volume of ideas, ideally you have 1, 2, 3 in the backup as well in case the first one fails. You want to have a learning exercise process where in 30 days we can say, hey, worked with this company, realized it's possibly successful, elevates our thinking, but it's probably not a fit for us. Let's go to number 2. And having that rigorous process to continue to learn and accept failure with a learning excellence, I think is a key element. The last point on it is purpose-built for working with startups. Sometimes in our portfolio, I'll introduce companies to a large company and they say, they just sent me this 67-page NDA. They want me to do Cyrillic support, and I'm not even sure what Cyrillic support means. Like, oh, okay, they sent you their normal corporate NDA, nothing specific to you as a startup, meaning not aligned. So get your finance team, your legal team, your security team, your business, your building operations, let them in the building. All these sorts of things to make it simple as possible to move fast and competitive. And then the last is on the investment side. And we love to see corporate venture money coming in to support our companies, but at a later stage of their maturity. Early is the wrong sort of signal. It's the wrong sort of time for corporate venture to be involved precisely. But your knowledge, your PhD level knowledge of how your business operates is huge insight. Just think of a startup just eager as heck to go build a use case, build technology for your specific industry. They don't know all the deep things that are going on inside of your business. You guys have PhDs at every different use case. If you could educate them on how your business operates. I met with the CEO of a very large company, came to the US from the UK, said, I want to set up a CVC, corporate venture arm. I want to create an incubation lab. I want to do all this stuff. We've got funding for that. I said, you'd be one of hundreds here in the Valley or trying to be like a venture firm and all of that. You're in the UK. We can introduce companies to you. Give us the use cases, but then train them on how to be successful in your company. They then launch something they call a certification model. So they take a startup through a quick study. Here's our domain skills. Here's even our jargon. Here's how things organize. And the result is when that startup arrives in London or wherever to begin on a use case on a project, boy, they're just so much more equipped to succeed. And so the investment of knowledge is really the best practice. So that's the 3 I's, but then there's a sort of checklist, and these are sort of common housekeeping sort of things. The ones that jump out at me are remove the roadblocks, as I talked about, know your customers. And this is often one that I see as really problematic. Corporate teams don't really know their customer. Can you answer a sentence for your customer from a use case standpoint? Can you understand viscerally why they're so exacerbated about a problem? And are you an enabler to that? And is the senior leadership exhibiting that sort of behavior? Are you out on road tours and whatnot, being close to your customers? So being offline there is where you get the mismatch. The bold imagination, I think, is an often problem that we see in large corporations as well. They take these small bets when in fact they should be changing the world. You have capacity to change the world. On the incubation side, I think a best practice is to have this innovation whisperer, somebody who can both be an operator, skilled person, understands your business, understands how to run an organization, or how your organization runs, but at the same time understand the needs of a startup. So huge credibility with the business owners, but also capability to bring the rest of the team together. There's sort of a pipeline process of this whole ideate, incubate, and then invest for impact. The sort of the volumes to me is the key takeaway on that. On the shepherding process is the takeaway on the incubate, and then the celebrating team success on outcome of failure is also a key piece. And this is a bit self-serving. Sometimes companies will meet with us, large corporate teams, say, we're not really able to work with early stage companies. We need that company to be a lot more mature. And we need them to be internationally deployed. And I say, well, that's great, but you're going to have a limited ability to really be the design partner, to really organize your own unique requirements into the equation because they're in early product definition. What a great time to really accelerate your own R&D through the efforts or on the shoulders of a startup. So for us, we love early sort of connection. And then the last question I always get is sort of who owns all this process? And I'm sure you've all seen the Horizon model. Simple analogy at the bottom here with the three logos. New toothpaste flavor, Horizon 1. Everybody ought to be thinking about Horizon 1 sort of problems, so you can guess who this use case is. Somebody in the toothpaste business. And Horizon 2 then is, let's go create adjacent revenue on top of a business we're already in. So, hey, we sell toothpaste, we own that market. How about we do white strips on top of that? It's the same customer, they'll buy the same things together. We just got a 30% uplift in a market that we're already expert in. And then the third one, Horizon 3, hey, we're ready to break our industry. We're actually going to either kill something that's dying or open a whole new market. This was a toothbrush that had lighting mechanism that could determine if your teeth needed extra help or whatever. It would work as a sort of a whole SaaS solution that would work with your dentist and update them and a whole, it didn't work, by the way, but a big idea, which is, wow, okay, but bold in its sense, and really outside of the norm, so a willingness to think big. A different team is responsible for each of these. So Horizon 1 is the whole organization. What's the new flavor? Should we try some sort of, Coca-Cola flavored toothpaste? Cool, that would be great. And where do those ideas go? And is there an acceptance process? And how does that encourage the whole organization to participate? Horizon 2 is probably meeting with your venture firms and finding new ideas and new outside of your normal scheme, working with R&D internally. And that's a special group that's probably purpose-built to go incubate a new idea that's adjacent to a market they know and know well. And then Horizon 3 is probably a corporate team that's very specific, maybe appointed by the CEO or the board to go disrupt, even kill off one of your existing businesses that probably needs to be twilighted. So they quietly work an opportunity to do M&A or some sort of targeted sort of things. And so what you get there is timeline, ownership, and specificity around metrics as well. And those sorts of things I think are critical in distilling innovation from this amorphous term into something that people understand and own. So there's all sorts of simple takeaways. This is an example of lots of startups is at the top. So what this is 4 key areas. 700 startups were looked at, 150 went into active conversations, 25 completed real POCs, and 7 were actually licensed against these 4 individual areas of target. Really focused. Volume mattered, process of accepting failure mattered, but results are demonstrated. So these are sort of the things that we're seeing. What I'm going to close with is say, we're at a really important inflection around innovation. Of course, Gen AI, all sorts of superlatives happening. I think it's real. This is the democratization of innovation. We're going to see a whole new investment opportunity from our perspective. We love these sort of generational transformations. This is a full cake stack, if you will, a whole new platform will be built for this AI-first world. Everything down at the silicon layer, everything at the data layer, of course. Cyber will be built specifically for this environment. Training and onboarding, SaaS-based solutions with an AI-first agenda. We're just at the beginning. Your competition is moving faster than you. How are you innovating? Innovation is a skill. Be an Olympian.